This economic catastrophe is entirely preventable.
Welcome to China Events. I am Jason. Since the beginning of this year, the United States has been ushering in a huge debt crisis, and the global distrust of the dollar has exacerbated the U.S. economic crisis. China, as the second largest holder of U.S. debt, has been selling U.S. debt for 3 consecutive months. According to Globe reports, the U.S. Treasury Department gave the data show that in June the U.S. debt of the top 3 large foreign debt hosted a change in the amount of Japan and the United Kingdom to increase their holdings, and China reduced its holdings of U.S. debt by $11.3 billion, which means that China has been reducing its holdings of U.S. bonds for 3 consecutive months, and China's holdings of U.S. debt currently amounted to $835.4 billion, which is a new record low in 14 years. It is worth noting that, although the scale of China's sell-off of U.S. debt is not large, but China's long-term adherence to the general direction is to sell U.S. debt. From April last year, China's holdings of U.S. debt has been less than $1 trillion. From last year's August to this year's February, China has reduced its holdings of U.S. debt for 7 months in a row. Only this year's March slightly increased holdings of U.S. debt of $20.3 billion, followed by April, May, June are reducing U.S. debt holdings. In June this year, the U.S. Congress in the last minute before the collapse of the U.S. debt, through the debt ceiling adjustment bill to save the precarious U.S. economy, but the United States is now the situation is still not optimistic. Currently, the total debt of the United States is close to $35 trillion, it will not take a few years, the U.S. debt will climb to $50 trillion. From the past data, the first largest holder of U.S. debt, Japan, is also constantly selling U.S. debt. Before May, Japan reduced its holdings of U.S. Treasury bonds by $30.4 billion, and only a small increase in U.S. debt holdings of $8.8 billion in June. Therefore, it can be said that the general direction of Japan is also in the reduction of U.S. debt holdings. Overall, China and Japan to reduce holdings of U.S. debt moves, for the urgent need to find a new issue of U.S. debt, reliable buyers, of the U.S. Treasury, is a very dangerous signal. To this end, the United States is also active action. In July, the U.S. Secretary of the Treasury Yellen visited China. From the good side, Yellen's visit to China to strengthen economic exchanges and cooperation between the United States and China. Yellen also said in an interview, there are some misunderstandings between the United States and China, and hoped that her trip to China can resolve misunderstandings. During her visit to China, she even said bluntly, the economic split between the United States and China is a huge crisis for the U.S. economy, but also catastrophic. However, Yellen said one thing and did another. China hopes that the United States can lift the tariffs imposed on China, and the economy completely lifted the restrictions on both sides, but the United States did not consider this in the slightest. Yellen claimed on the surface will be brought back to the United States to discuss the issue, but she returned to China. China waited for the U.S. science and technology in the field of semiconductors blocked to China, enough to see the U.S. so-called with the lack of sincerity in China's cooperation. In addition, Yellen, as the U.S. Secretary of the Treasury, came to China. There is a request, that is, let China buy $700 billion U.S. debt. U.S. debt ceiling passed, the United States released the first time $700 billion U.S. debt. In order to deal with these U.S. debt, Yellen had to come to China, soft words. Now look, Yellen, this trip to China is a trip for nothing. China has given the United States with the actual action of the answer, increase U.S. debt. It is unlikely that the thing, while suppressing China, while hoping that China to save the U.S. economy, it is the United States of America's delusional thinking. Recently, Yellen issued a warning that China's economic slowdown, the Russian-Ukrainian conflict expanding as well as global disasters such as climate change may pose a risk to global economic development, but she is optimistic about the overall U.S. economy. A recent Bloomberg article pointed out that the U.S. made a big mistake in its policy toward China, leading to a continued cooling of U.S.-China relations, which is one of the main reasons for China to reduce its holdings of U.S. debt. At the same time, the U.S. media also listed the U.S. to deal with the issue of China on the 3 mistakes. The U.S. believes that China will either collapse or rule the world. However, through comprehensive economic reforms, China has formed a kind of step development model from low-income to high-income, enabling the Chinese economy to maintain a growth rate of about 4%. In the future, China, which is firmly moving towards peaceful development, will not become an economic hegemony. China and the United States will remain allies and competitors for a long time. The United States misunderstands that the coherence of China's social governance far outweighs its changeability. Whether it is economic or foreign policy, China's attitude is basically the same. When it comes to the issue of Sino-US relations, China always adheres to the principle of equality and mutual benefit, win-win cooperation, and hopes to be able to go hand in hand with the United States. In the face of this situation, the challenge for the United States is how to formulate a China policy that is consistent with its own values without sacrificing its overall strategic objectives. This requires the U.S. government to handle the relationship between the two countries carefully and shift its hegemonic thinking. The U.S. mistakenly believes that China's rapid economic growth has been achieved by cheating the United States. For a long time, Washington has been under pressure to impose sanctions on China to protect its national interests, without realizing that China's rapid economic development is closely linked to the size of its market, abundant labor force and mature technological environment. Therefore, the United States to promote Sino-US economic and trade cooperation back on track. In addition, it should be clear that, at this stage, selling U.S. debt has four major benefits for China. One is to realize the diversification of funds to go. China holds a large number of U.S. bonds, making its capital investment is too concentrated in the U.S. Treasury bonds, there is a high risk. Sell U.S. bonds can transfer funds to other investment areas, realize more diversified capital allocation, reduce risk. Secondly, it is to stabilize the exchange rate of RMB. China's selling of U.S. bonds may lead to an increase in the supply of U.S. dollars, which in turn will cause the depreciation of the U.S. dollar. The exchange rate between the RMB and the U.S. dollar remains basically stable, which is conducive to the competitiveness of Chinese exporters and economic growth. Third, reducing dependence on the United States. China's sale of U.S. debt reduces its debt dependence on the United States, which helps reduce China's geopolitical risks in global trade and finance. Fourth, adjusting the structure of foreign exchange reserves. China is the world's largest holder of foreign exchange reserves, most of which are in the form of U.S. dollars. Selling some U.S. debt can adjust the structure of foreign exchange reserves and improve asset liquidity and yield. Therefore, for a variety of reasons, China is unlikely to buy more U.S. debt. The probability will also sell U.S. debt under the right opportunity until emptied. At the same time, this is the last thing the United States would like to see China do at present. To reverse this situation, the United States needs to make practical actions to improve relations with China.